Hello, everyone, and thank you for joining. I'm Joanne Carvalho, and I'll be hosting today's webinar where we'll discuss turning TCA into trading outcomes using AI and ML. Before we begin, just a few housekeeping notes. First, the webinar is recorded. We will email the recording and slides to all the registrants and attendees after the call. Also, you can interact with us via the widgets on your screen. Feel free to submit any questions via the purple Q&A button. We will answer all questions at the end of our session. And if you need any technical help, feel free to click on the yellow question mark button to get any technical assistance that's needed. So as mentioned, my name is Joanne Carvalho. I'm part of the proposition sales team here at Refinitiv, focusing on our trading solutions with a specific focus on our partnership with Refinitiv and QUOD Financial. With me today here, I also have Mr. Michael Smith. Michael Smith is the Director of Global Sales and Strategy and Execution for the OEMS and Equities here at Refinitiv, where he supports the development of Refinitiv sales for trading workflows. Prior to this role, Mike also spent 9 years supporting our equity desktop products in various roles. Before coming to Refinitiv, he worked as a sales trader at Societe Generale, Fidelity, and Convergent as well. He also spent time as a trader for Columbia Management's Quantitative Strategy Group. Thanks for joining us today, Mike. We also have Meedan Gabe on the line with us. Meedan is currently the Chief Revenue Officer at QUOD Financial, a multi-asset trading platform for the sell side, specializing in execution and automation. He brings strong technical expertise and industry experience, spanning both in trading, artificial intelligence and machine learning, and big data. Thank you, gentlemen, for joining me today. It's a pleasure to have you guys here.
Thanks, Joanne.
Thanks. So with that, let's get started, right? I wanted to start by mentioning that now more than ever, traders are more than responsible for improving their execution decisions. However, the complexity of technology really requires a better understanding around market conditions, correlated trading behavior, and predictable volatility. So current TCA tools do give traders the ability to pinpoint either their best and worst performances, but they're unable to truly provide information on how traders can better execute orders in similar conditions, right? So in today's webinar, we definitely want to examine the parameter optimization driven by real-time TCA and bringing the power of both artificial intelligence and machine learning to the traders' desks. So with that, let's start off our conversation by exploring our first question. What are the implications of significant increases in client volumes and trade executions during these times? Meedan, what would you say are some of the actual factors of implications that actually are driving this increase in client trading volumes?
So, I mean, certainly what we've seen, obviously, we're a multi-asset trading technology for buy and sell side. Our clients have seen a huge increase in pressure. I think everyone on the desks, anyone in any of these institutions that's watching this, will have seen client volumes increase. There's an increase in scrutiny that we're seeing from the end customer as well. So they're now deploying their own TCA tools to analyze the outcomes that they're seeing on the trading desks. The traders themselves are under a lot of pressure. I don't think anyone would put their hand up and say that they are seeing a major expansion in their trading desk. Usually there's fewer traders. Often that loss is a loss of high-level or long-term experience. So there's more juniors on the desk. The volumes have increased. The time pressure on individual trades is much greater. So with those higher volumes and with those shorter windows and with additional regulatory scrutiny, we're seeing people on the desk having to make faster and faster decisions. And then that runs all the way through to the increased volatility in the markets, whether we're looking at FX or equities or futures. All of these markets have a lot more happening in them much faster, which then in turn puts much more pressure on the desk to make better decisions. It's challenging the existing infrastructure, the existing algos, and really how they're using data. So I think every part of the challenges that are faced come from this increase in pressure and trying to find ways to alleviate that.
Definitely.
No, I agree with that, and think of, I was thinking about this when we started talking about having this conversation, and as myself being a Gen Xer, when I started on the desk, in the bull run of the late 90s, I was still writing tickets and calling the exchange and dealing with stuff. And TCA was like a fax that came in at the end of the week. Like, this is how we would send out data and it would come back. You know, the amount of trading volume and the data that you're looking at. And so for people of my era that saw that change go from manual and fractions to high speed and decimalization and more client coverage and more quantitative views, I think some of us are still trying to live in the old world, but I think the fast moving forward are like, okay, what can you do to make my job easier, and how can I be better? And I think some of the stuff we'll talk about today will kind of lead into that.
Absolutely. So definitely.
I think specifically on that as well, that the margins have been driven down. So exactly to your point, the ability to really generate revenue and to deliver for clients, that edge between a profit-making and a loss-making trade, or even achieving benchmark. I mean, now achieving benchmark is considered a failure, where before you'd say, okay, well, this is how I've performed against VWAP. I've met VWAP. A client's reaction to that is, well, I'm not giving you the business to meet benchmarks. You have to improve on benchmarks. And that really becomes a challenge, particularly as the electronification has increased and the volumes have increased.
Absolutely, absolutely. And on that topic of challenges as well, we want to make this webinar very interactive. So let's start off with one of our first poll questions here. Please feel free, everybody who's listening in, to vote now. Speaking of some of the challenges we just mentioned, what would you say is your biggest challenge in using TCA? Give everybody about a minute here to plug in their answers. Alrighty, let's see if we're getting some answers coming in already. All right, so it does seem like over 45% of the audience believes that data management is one of the biggest challenges that have come across. Great. So with data management definitely being the driver here, let's further discuss that, right? The challenges that are facing the quant teams, that are facing the trading desks, as mentioned, using the current TCA tools have come into play. Mike, what would you say are some of the data management capabilities or factors that should come into play with TCA?
Well, you know, there's two things the way I think of data management, right? So there's the proliferation of more sites. So you're looking at more exchanges, more data to look at what's a good price. You know, in the U.S. specifically, right? We have a consolidated, trade book, but when you look at, international traders, they are also looking at international unconsolidated markets. So it's really about pulling in the correct amount of data. It's, what goes into that. So it's a lot of different items to kind of pull in. And then it's also about your quality of your data, looking back at your trade execution, what comes back, your timestamps, things of that nature. And then I think sort of, aggregation. And I think, Meaden, we were talking about this in leading up to this.
Absolutely. Meaden, yeah, what would you say are some of even the biggest challenge facing traders, right, to implement both AI, machine learning, automation into this TCA, also taking into consideration data management, right? What would you say are some of the factors there?
I think what's most interesting about TCA is the tool that the desk has access to improve execution outcomes. And improving execution outcomes is the most deterministic way to improve your trading. You can look at investment strategies for years and never necessarily accurately predict the market, but if every single time you send an order in, you're getting the best possible outcome based on your investment strategy, then you've made more money, and you've made more money for your clients. So this fact that you can only improve what you can measure, and TCA is your tool for understanding how have I actually traded? How have I actually executed into the market? So you end up in this situation that the poll result is exactly what I'd expect, which is that the two main concerns here are either what is the data that I'm using? How can I gather this data? How can I aggregate it? Can I use non-conventional forms of data to drive my metrics? All the way through to what is the benchmark that I'm actually making use of? And ultimately, how do I translate the TCA results into some kind of change? And this then becomes the challenge, because what we're seeing in use of TCA, and I think every trader will express this exact pain, which is I have a result. I have a document in front of me which is telling me that I deviated from a benchmark, that I could have improved my deviation from a rival price, or I could have met something better. My client's on the phone with me right now, and they're saying they're not happy with a particular outcome. But the question is, what do I do? How do I use this benchmark? How do I use this TCA output to actually change my behavior? And if you go back 5 years or 6 years pre-major electronification, you could simply say, okay, well, I'm going to remember, a mid-cap stock in these market conditions with these particular LPs in my FX OTC market, I'm going to interact with them differently, or I'm never using this vendor again or this LP again for this type of trade. But now all of that execution intelligence is done automatically. So actually, you don't just have to source this data and process it and get it into your EOMS, whatever that product is. The challenge actually becomes, how can I look at this post-trade output and convert it into an actionable pre-trade input that isn't just an algo wheel where I'm trying to make a choice between different outcomes. It's all the way through to what algo am I choosing? How am I configuring it? How is it splitting it into the market? Should I be aggressing the market now and generating impact, or can I use some kind of action intelligence to say, well, in these conditions, it's better to wait and split it up over time? So all the parameters of the execution are being influenced by both this data, but also this challenge of getting some kind of action from the TCA that you're receiving.
Absolutely. I would say also just you need that enriched data, right? You need to look at the quality of data you have, look at the actual amount of data you have too, right? You don't want to be too skewed and looking at it generally, or either having such a small set of data to go off of that could be, setting certain outliers that wouldn't really be taken into consideration if you had a great amount of data to look at. And then not only, like you said, achieving that, having that information available post-trade, but in real-time trading decisions, applying all that post-trade knowledge that you have gained and getting that consultative and challenging approach. Say, well, actually looking at these market conditions, it's similar to how I traded so-and-so day. Out of all this data that I have combined and analyzed, and truly apply it and make that efficient decision right then and there. Sorry, Mike, I believe you were going to input some.
No, I'm both. You guys are both kind of saying. I attended Trade Tech in Europe last week, and listening to one of the gentlemen said that TCA, and I love this. He said it's a data-ish topic, and I think. I think, as far as what data to use, but I think that's an old school mentality. That is, with the stuff that you guys are talking about, we can quantify. We have more data to look at. You can make a quantitative decision on how to trade better with a robust TCA, whereas the older kind of methodology that I kind of grew up on in this industry was like, well, here's your report card. Good luck, It's like there was no, well, if you could have done this a little better, or you could, and you get that real time. It was always delayed. It was always like post trade kind of, really, and if we're all honest, not really adding much value. It gives you a report card, but it's like, okay, you're not telling me how to improve here. You're just telling me how I did, and that doesn't really do me any good. This is more like a coaching relationship than anything else.
Exactly to that point, so the original question, what needs to be addressed, and how can technologies change this? And there's a lovely question that's just come through in the Q&A, which more of a statement saying businesses need to have a long-term vision of deriving value from TCA, and that's absolutely true. It's an investment. generating a quick report or outsourcing it to a third-party TCA provider is a tick in the box. It's a compliance decision, which is necessary and important. And with some insight into what you're doing, you're able to monitor your aggregate behavior over time. Are we facing any significant issues as far as client flow is concerned? But actually, the evolution of TCA is real time. And this total integration between the real-time data I'm seeing, so TCA becoming pre-trade, looking at volatility in the market, looking at real-time indicators to provide feedback to traders, but then being able to integrate that into the EOMS and allowing it to change parameters in real time. And I think one of the topics, we talk about this a little bit later, but these two critical areas of how do I configure this execution to get a good outcome? And potentially where it's moving towards is the self-configuration of, for example, an algo inside the market. But key is this vision. The vision and investment, whether you're investing in data architecture, whether you're investing in OMS architecture, you have to be able to store and manage this data. And I think it's also very, very important to remember that the data is unique. You can't look at aggregate generic information because your view of the market is different. In OTC markets, even more so, but even in equities, which have a lot of benchmarks or clear indications across different markets, the way that you're interacting with it and your client flow is still unique to you. And the providers that you're using may be using that data in different ways. So an arrival price benchmark for one vendor may be slightly different from an arrival price from another. So being very cautious with the information, pull data in, pull data out.
Absolutely. That makes total sense. And definitely, as you mentioned, right, traders still have their expertise, their reasoning for trading the way they do and why that's significant to their specific workflow. That kind of ties in perfectly to our next question, right? In this midst of out with the old, in with the new, and still maintaining their competitive edge, right, as each firm does, what do traders really need to overcome and successfully implement the way they looked at TCA and the tools and their analysis within the tools to truly successfully plug in machine learning, artificial intelligence driven into their TCA tool? What would you guys say will really need to be overcome from taking out the old and bringing in the new and efficiently applying TCA using AI and ML?
So I think the first thing I want to address just at a high level is machine learning and artificial intelligence is not the solution for every problem. For a start, it's a broad statement. There are different types of applications of machine learning. There are different types of applications of any form of artificial intelligence. But actually, let's look at the type of problem that you're trying to solve. The first objective of anyone that's looking at implementing some kind of TCA strategy is deciding as a business, what do I actually need to measure? And that's both looking at your clients and what your clients are interested in. That's also looking and discussing with your traders who hold the experience of how to interact with the market and saying, when you are making decisions, you've been doing this for 10, 20, 30 years, when you are trying to make decisions, what metrics are you using and what factors are you looking at? And every business can incorporate that into their TCA. If you actually look at machine learning is good for solving complex problems, not difficult problems. So a complex problem is a problem that involves looking at trends across large amounts of data. A difficult problem is something that is difficult to predict. It requires interpretation. It requires experience outside of the data that's being delivered. Traders are never going to be replaced for the difficulty of the role. The complexity is what TCA is trying to identify. Is there something you can see inside of this data that you haven't seen before, or we can help you understand? So what do they need to overcome it? They need to actually be involved in the process of engagement by the business in what's the data they're using, what are the benchmarks they're using. That's absolutely key, so that what they're getting back isn't just a report card. It is a valuable real-time insight that, as we'll move towards, will become actionable automatically through the use of this totally integrated TCA EOMS solution.
Absolutely. So it definitely, if anything, help them focus on the insight, right? Still keeping them with their competitive edge. We know traders know exactly what they're doing. It's a matter of efficiently providing that information so that they could apply it in an even better way. Mike, any points you would like to make there as well?
No, I mean, I think, Meaden makes some good points. It's, back when we were first looking at, the first iteration of algos, it was a lot of based off of, people interviewing the traders, right? It was interview, and it comes out of that machine and the kind of the logic of, there's a question in here from an old colleague, and I think Richard hits it, like nowcasting, right? So it's kind of like looking at what the data is telling you using your kind of the trader's history of how they see things, how things tend to work, but also using that quantification of the data to really, because there's got to be some sort of gut trading that has made a ton of people a lot of money, but also that quantification of data that really tells you, okay, you're correct here. So looking at short-term analysis over long periods of time. So what tends to happen in a shorter period, but using a lot of data that Meaden, you had mentioned, you kind of had to remember. Oh yeah, I remember if Fed's reporting, I can't really trade FX passively here. I need to make sure that if something moves, the quantification of the TCA or the machine learning, quote unquote, part of that will give us that sort of backbone to make our to help make decisions on and do it in real time.
Absolutely. I agree with you guys 100%. With that as well, being that we're touching on the points of how focusing and getting this insight using TCA, using machine learning, using an enhanced, sophisticated tool within TCA to actually conduct this analysis. Let's jump over to our next poll question as well, and we'll give some of the audience here some time to answer. Which of these concerns will actually limit your adoption? And we spoke about what's needed to adopt this new era of TCA, the new sophistication that is available within TCA. But what are some of the concerns on your adoption of this advanced pre and post trade TCA? I'll give everybody about a minute here to reply.
While we're waiting on the poll, why don't Meaden, Richard has a couple of good questions in there that I think others might be interested in kind of hearing off that, and I think your kind of expertise in that area might be able to answer that a little bit better.
I was just looking through that question. So I think one of the very interesting applications, and before we were talking about this idea of parameter optimization, and specifically the question here around how can we use TCA inputs to drive short-term forecasting, what are people working on? Just as you were saying, Mike, the two areas really become, can I improve the in-flight execution of, for example, algos? So one area we're investing a lot of time from a product perspective is looking at something like the PEG. Partly it's across all asset classes. But also, if you look at a peg in a market, what you're doing is you're looking at historical conditions. You still have an execution instruction, which is within these criteria I need to execute. But what you're able to make use of is the real-time data in front of you to say, how am I adjusting my offset? And we saw that as a very simple but very powerful application for PCA-driven parameter optimization. How can my offset be turned into a prediction of probability? So rather than saying I want to be 2 basis points away from mid, I can say I want an 80% chance of execution within a 10-minute window. So that's a very practical application for parameter optimization within a smart order router or algo engine that you can apply in real time. And the other piece is actually feeding back to the trader a specific recommendation saying, in these market conditions, we suggest these settings. And it's not necessarily advising them on the macro strategy of what they're trying to do, but it's looking at all of the settings. And even if I look at a particular broker algo, it could have 50 configurable parameters. And it's overwhelming for a trader. What do I change? A mid-cap stock in these conditions, do I put the aggressivity at 7 or a 4? So it's trying to feed the TCA results with backtesting to the trader to say, in these market conditions, do what you want, because you're still the owner of the decision, but perhaps try sliding the 6 down a little bit. So that's really where the parameter optimization is trying to feed from live TCA into smart order routing and simplifying the challenges of making TCA applicable.
Yeah, Meaden, I would say that one of the key area of interest that we've come across while we've been speaking to clients and enhancing specific client workflows has been exactly that, right? I have all these parameters within all these different algos that I use. How do I quickly define what I need? And not only define what I need, but how do I use all this information that I have within my post-trade TCA, look at it real time within my order ticket, right? And have that recommendation. Like you said, we're not recommending them how to trade. They're the experts on that. But based off of what you've done in the past, based off of the parameter specifications you've applied in the past and these market conditions, from within your order ticket, you're able to apply that information, look at it real time, and execute accordingly. Just that in and of itself has provided so much efficiency to the clients that we've been speaking to. So I couldn't agree more on the importance of being able to have that within a multi-asset platform, right? You're looking this across the board, across all your algo specifications and parameters as well. So thank you definitely for jumping in there, Mike, and adding that.
No. I was just saying, Richard's follow-up, machine learning struggles with non-stationary problems. What can we do in spite of this? It comes back to this complex versus difficult. Leave the non-stationary with the trader and apply the machine learning and the TCA to smaller, more manageable, complex problems. As they're deciding how to deal with the non-stationary, every execution they perform, the execution itself can be optimized via the TCA output. So if the problem's too difficult, change the problem that you're trying to solve with machine learning. That's the short-term solution.
Yeah,
Absolutely.
I mean, that's kind of, back, and this is now forever ago, I'm a dinosaur, but trading some of these orders, I would have given my left arm to have some of this stuff, because you're over on this machine sending out like little small orders that are just kind of rebalancing, keeping you, whether it be sector neutral, sort of those sort of things that were just very basic, very easy slicing to get in and out. And you have to take your focus off of, these immensely, very large orders that are complex and maybe a small cap. So to use the machine learning and that sort of level of information to take away, that, 30 to 40 to 50% of what you're doing, that's really, it's not really adding that much in the value is concerned, and really keep that focus on the stuff that is, non-stationary, like those moving names, widespreads.
Exactly, true. So now that we've established the importance of parameter optimization, right, and how it's truly improving the trading strategies, let's go back to our poll question also and see which are of these concerns as far as actually adopting the advanced pre and post trade TCA are of concern to our audience. I think everybody should have some time to fill it out now. So here we go. The results are in. So over 25% here, we're seeing 25 and 37. So close to 40% is lack of quality of data availability. Interesting. So as far as data availability goes, oh, sorry, my slide here. Michael, do you think you want to touch base a little bit as far as data availability goes, and what are the implications that we could definitely see there, lack thereof?
I think there's enough data available. I just think that it might be the way it's being used currently. There have been for years, pre-post TCA, right? So the pre-TCA is going to give you a risk analysis. It's going to walk you through what's the, one of the questions that just came in is, what's the most valuable asset in a trade? And if, coming from a program trading desk, that's the ones I want to know which ones to focus on. So this data availability, I would kind of disagree with that a little bit and say, like, the data's there, but it might not be the analytics that have been there around the data. So, Meaden, that's kind of, I think, where we were.
I'm just going to gently challenge you on that. From a data vendor's perspective, you're saying the data is there, and it is. The problem is not the availability of the data as a data provider. The problem is getting the data into the system that you're using, where the industry has grown up around vendors who are not providing an open infrastructure for consuming, normalizing, and managing that data. So to the customer, their experience is, well, the data's just not there. I mean, even looking at something like millisecond or microsecond timestamping and plotting was a relatively new initiative if you look back over the last kind of 8 to 10 years. So, yeah, I've got 2 sets of data, and guess what? They're not matching by a couple of milliseconds, which means I've got 1,000 out-of-sync events in any given second that I'm looking at, and I now have data that's totally non-actionable for an automated process. So I think the beauty of what's changing at the moment is the data quality and the ability to consume that data in a technology platform that you're actually using for trading is now totally different. Refinitiv has always been there providing the quality of data, but I don't think the end applications have been there receiving it. That's actually been the bigger challenge.
Yeah, no, that's a good point. Yeah, because like you said, always been that, pairing those off to make sure that it's the same, what you're trading on is what you're seeing, or what those two types of. But yeah, I think how do we use that? That's the next. I think the how do we go forward from here?
Absolutely. Applying the best-in-class data, right? You look at Refinitiv, the best-in-class data that we actually provide, having a platform that's able to plug and play with that data, apply all execution data that's also coming in, and have that all relevantly display within TCA for analytics is highly, highly important. So I would definitely say that it's not just lack, but exactly the point that Meaden said, it's lack of being able to apply that into a platform that could actually generate the information you need. Providing the best-in-class data is being plugged into that system, right?
Yeah, no, a question, just a comment just kind of came through, and it kind of recentered my thought process. I come from an equity background, but equities is easy, generally speaking. There's a lot of data on equities. When you're talking about a fixed income market or FX market, or you get a little bit more data with the futures around commodities. But now, as we look into these other classes, as they start to electronify the data quality, or knowing what you're looking at might be a little bit different.
Absolutely. And that kind of definitely ties us into the next topic, or question of discussion as well, right? So how can trading desks implement a successful TCA program across all asset classes, right, to improve this performance, right? You have the data, you have the platform now. How do they truly implement across a TCA program to improve this performance on both pre and post-trade insights?
I will leave that one with you, Meaden, because this one is definitely your expertise.
So I think, generally speaking, when we look at the adoption of TCA, and one of the questions that came through before, that was a powerful point, the starting point is an intent. It's an intent from the business and with support of the traders to move towards a better use of analytics. It's making sure that you're aligning this with your clients. So that's key. And one of the poll results was even concerns over how a client is going to make use of TCA. But I think what we're seeing in the marketplace is the end customers are now adopting TCA to analyze their brokers and their vendors. So that's going to happen. So it's trying to be ahead of it to make sure that you can put the architecture in place. Any kind of significant change to trading architecture, even implementing a TCA, in particular, implementing a TCA solution that's integrated, and even worse, implementing some kind of data-driven automation around TCA, this is a multi-year initiative. There are cost implications of that, but there's also huge savings and execution improvements open to everyone who uses it, not just in better representing yourself in the market, so attracting additional investment or additional customers, but also in just eliminating wastage. Very simple stuff like obviously poor trades or poor trading decisions, all the way through to a very subtle shift of how you're interacting with brokers or how you're interacting with liquidity. So step one, the big step one, is buy-in from the business. And to a certain extent, that's joining this webinar. So having people here, hiring great teams, answer to one of the questions that's come up, is also very important. And this is very much people. You can't just buy a product and expect it to solve your problems. So step one, buy-in from the business. Step two, defining the metrics that are relevant for your organization. Totally critical. Because if you have a benchmark that doesn't apply to how you trade, doesn't apply to your customers, doesn't apply to your asset class, then it's worthless. Feeding that benchmark and making sure you normalize the data is then the third step. So to Mike and Joanne's point around making sure I've got the data, I'm looking for alternative data sources, I am normalizing and storing that. And also, I think it's not trying to do too much in one go. So deciding what are the quick wins. You know, there's a lot of low-hanging fruit around automation. There's a lot of low-hanging fruit around using TCA on a day-to-day basis. So is there something you can do that brings immediate return, or at least within that first 12 months of project, that's bringing noticeable return so you can justify taking it further? And that's not necessarily building your own machine learning project. And there's a lot of very accessible libraries. There's a lot of applications. So using ourselves as an example, we are a product that comes with machine learning and TCA embedded in it. So you can leverage that even if it's not your only source of TCA or your only source of machine learning. So it's not trying to overextend and go too big. It's just finding those quick wins and getting the buy-in from every part of the organization, business, traders, IT. That's a highly simplified way of approaching it, but it really is the structure that I think people need to take.
Absolutely. And we've seen, I think the trend has definitely been around the markets that we've been hearing around consolidation, right, across multi-asset classes. We see that not only on the trading platform, but being able to truly consolidate across asset classes, of course, being able to consolidate one place to go for your data and analytics, and also apply TCA from whatever you are feeding into that platform is definitely key, right? Sometimes cost is even a conversation that comes into play, but we've seen from past clients where they've been saving over a quarter after applying their TCA analytics and using that real-time pre- and post-trade insight during their execution and trade decisions, right? So that also comes into play to a trading desk when implementing TCA. I'm consolidating across asset classes. I'm consolidating where I go to trade more efficiently, but I'm also looking and using the TCA tools that that platform uses and saving on cost by executing better by providing that information there for me, right? It's all in one spot. I could look at my TCA, I could apply that information, I can execute more efficiently, therefore driving up my commissions and helping me save on costs. Great. Let's also move forward. I know we've been making this webinar very, very interactive. I know we have one more poll question that we would like to get to. Mike, need any comments before I go to our next poll question? Good to go?
Not for me.
So another question we also have put in here is, what is your most important driver to adopt a more advanced TCA solution? So what would be a key driver that actually gets you to adopt a more advanced, more efficient trading solution? I'll give the audience another couple of seconds here to answer. Just giving everybody a few more seconds to get their answers in. Let's see what we have so far. Whoa, look at that. Better trading outcomes and decisions has taken the forefront here for sure. So the most important driver, of course, is to make better trading outcomes and decisions, right? Which I think is something we've just alluded to as well, right? Being able to apply an enhanced TCA solution to truly have the decision, all the factors you need to take into consideration when executing right then and there. I think we've definitely touched on that point throughout our call today. Meehan, would you like to enhance anything as far as being able to not only apply these trading outcome and decisions, but what should a trader look within the TCA platform that they're using to reach these outcomes and decisions?
Yeah, so I think what this poll really ties together is every part of the conversation that we've had to this point. The objective that I have from TCA is to achieve better trading outcomes. Better trading outcomes on individual trades are directly impacting my profit and the alpha that I'm generating. And it is the quickest and most effective way to improve profitability, both for my customers and for myself, and therefore gain more business. So what does that look like? So within the parameter optimization, it's about having the machine learning driven TCA make these direct recommendations of how can I configure my outcomes. It's trying to integrate these into algos or into execution strategies or directly into the order ticket. So for us, what we're trying to deliver is this idea of a simple traffic light system that's providing information to the trader from the TCA. So on one screen, you've got your real-time execution, and you're able to interact with trades as they're happening in real time. That's the ultimate goal, moving away from the report card, how did I do last month, all the way through to how am I doing right now across all of my different asset classes. Still maintaining that report card view. And actually, I think we put together just a couple of generic screenshots, which I can flip to. So something as simple as having an overview, having an overview within my TCA of what's happening across my desk. Can I look at P&L across a specific asset class? Can I look at the trends of how I'm executing and where I'm executing across different brokers? And can I use that information, but at the same time still do individual order analysis in real time? And what that can then present back to the trader inside their trading ticket is some kind of recommendation that says, look, in these conditions, we are not sure, based on historical events, that these are the best settings. But the trader is still making the decision. Ultimately, they hold the knowledge, they have the experience. I think one of the key fears when it comes to any kind of machine learning adoption is either it's putting jobs under threat, which it doesn't. It's the migration of the trader from the person performing the action through to exceptions management. They become the moderator of what's happening, still applying their experience, but now able to do it in increased volume with increased effectiveness and improving individual execution outcomes. So this is exactly it. The poll result here is how can I improve my outcomes? It's to have this TCA information to hand. It's like getting the answers to an exam as it's happening and having those answers fed to me for me to be able to adjust my choices in real time. It's really a very, very powerful concept, and it's available. This isn't theoretical in a way that it really was a couple of years ago.
Agreed. And definitely it's taking a whole change into that post-trade view of reacting after the fact, right? You're looking T+1 at all the data that was provided and then trying to decide what to tweak, what parameters need to be adjusted, then apply to your decisions and hopefully have a more positive outcome. It's looking at it in real time, right? You're being proactive with that, like you just said, right? Starting to get the answers to the test as you're taking it. You're evolving with the market and working at the forefront of it, rather than later having to be reactive, look at TCA at a T+1, and then decide if those same decisions or outcomes that you're looking to tweak still apply, right? Especially going back to our first point, right? Being that the markets are so volatile, it's not feasible to wait for that T+1 sometimes and get that information and then tweak what you need to and not use the advanced TCA solutions that we're providing here, right? It's crucial to be able to have that now, have that in real time. So I couldn't agree more with you there for sure, Meehan. Michael, any questions or any any input you'd like to put there as well?
You know what, I was thinking, Meaden, as you were talking about, having the TCA platform, at your fingertips and not taking the job of traders. And for some reason, because I'm kind of a little bit of a movie buff, I immediately thought of The Matrix. And so there's human beings fighting machines, right? And in order to fight the machine better, they get into a machine that becomes the human. And I think of a really good TCA product as that such thing. It allows a human to do machine-like moves in trading, and it really enhances, almost makes you like a bionic trader sort of thing, to be a little bit, nerdy there. But that's kind of the idea. And like I said before, I can't imagine having these tools at my discretion back when I was, executing client orders, because I can go back immediately. I have this innate ability to remember trades like that from back in the day. And I can remember specific times where I'm just like, I know I'm doing this wrong right now, but I'm not really sure where to go. And you're just trying manually different things. And the TCA product, especially the real-time aspect of it, is so invaluable. I would have paid ungodly sums of money to have that at my discretion, because it would have led to return on investment incredibly. And I get so jealous seeing these tools come out now rather than when I was getting paid to do this.
I think that really it's this visibility. And the analogy I tend to use with people is, even if I look at self-driving cars, but cars themselves, as you are opening this TCA window, you're not just seeing through the windshield, you're not just seeing through the side mirrors, you're not just seeing through the back, but you're starting to get that enhanced level of visibility and that real-time adjustment, the lane control, the recommendations, the crash warning, the auto wipers. It's really, what's the purpose of this? The purpose is to relieve mental load of the trader. The purpose is to increase real-time visibility, improve safety. The application in the automotive industry is exactly the same as the application in trading. You want to get there faster, you want to get there better, you want route optimization. And from a pattern point of view, we even talk about that in trading, that the fastest route between 2 points, there's a question here about momentum and market impact. It's not necessarily going straight from A to B. What traders know are that during the school open and close, there's going to be a lot more traffic on certain routes, so I need to avoid that. Similarly, during auctions or pre-auction phases, or when desks come online in Asia, or when there's a Fed announcement, different asset classes are going to interact with the market in different ways. And actually, it's the historical backtesting, it's the use of TCA, it's the use of machine learning, and it's baby steps as well. You don't need to go all out TCA machine learning. As long as it's real time, it can simply highlight that doing this particular trade at 1 o'clock in the afternoon is probably a bad idea, and there are ways to improve that. What AI and ML brings are patterns that you simply can't see, and that's drawing in all of the data. So if you look at the incredible depth of data that's available from Refinitiv specifically, and the ability to consume and absorb all of this data into analytics, and what we're moving towards. So the most recent project that we're delivering with some clients is this total wraparound testing of a deployment. We just want to rerun data over and over and over and over, trying different algos, trying different parameters, and running that into the same TCA system that managed the live trade, again, to try and predict what unexpected outcomes and what unexpected improvements could happen if I am interacting with liquidity in a slightly different way. And one of the beauties of multi-asset is not only can you use this learning across all asset classes, but if you're using a multi-asset trading platform, you can even manage the impact that your FX might be having on equities markets, because the markets are becoming more and more integrated. We offer market making and trading technology across different asset classes. And I can see for some clients, their FX price is being influenced by the trading that they're seeing or conducting in equities. And if you're a taker on the other side and you're executing in that market and you don't have that visibility, there may be things which are just inexplicable to you as a trader. Why has this happened? Where's the liquidity gone in this market? And actually, it's nothing to do with you. It's to do with a non-integrated desk who's maybe sitting 10 meters away, but you just don't talk to each other. And that's the role of the platform as well. So better trading outcomes, every part of what we're delivering, and all TCA providers and all OMS providers and all data providers, every part of what we're delivering is to try and deliver this better trading outcomes. But there's so much you can do with it. And that's what's really exciting about it.
Absolutely, absolutely. And that definitely ties into the next topic that we were discussing is how you apply and what are the practical steps? I think you just alluded to that a bit as well, Meaden, the practical steps and best practices to trading desks to adopt this best scale of TCA, right? And I think the points that you just touched upon where you're truly looking at it from a multi-asset point of view and looking at all the moving parts that are actually triggering the execution and the way the markets are going are highly, highly important and applicable in this scenario, right? Would you say, are there any other best steps, best practices you think that should be taken into consideration as these real-time TCA changes come into play and become definitely more visible and more in front of the trader on a day-to-day basis?
Am I allowed to say the best practical step is to buy QUOD and Refinitiv as a multi-asset trading solution? Can I say that?
I won't stop you from. I agree 100%. Sorry, Michael, go ahead.
No, I think that's probably a pretty good answer for anybody on our side. But I think, Meaden touched on this before a little bit, is really looking into what's right for your firm, right? What type of firm, what type of trading do you do? I've traded for clients before that were, we were high implementation shortfall because they were, as we were mentioning, a momentum type firm. So implementation shortfall was the right benchmark for them because they didn't care like what happened. Like it was like, I want to get in, this is where my alpha is, just get it done. And that was the trader kind of moving in and knowing what kind of how to do that depending on what type of firm. So I think that was critical. And Meaden had mentioned that before, is what's right for you, what's right for your clients or this type of client. And the trader on the sell side might have to change the metrics based on the type of clients they have as well.
Yeah, I also, from a cautionary point of view, that there's two, I guess, sort of gentle warnings that we see around this. One of them is machine learning doesn't solve, even TCA, but certainly machine learning enhanced TCA doesn't solve all problems. You have to understand and select the problem that you want to solve. It has to be integrated. You have to have the right data. So coming back to the organizational buy-in, making sure you've got the right product, making sure you've got the right data vendor, those are all crucial, and making sure you're applying it to the right problem. What are we trying to solve? What are the tools available? Is that right for my business to apply real-time TCA to this? The other thing, which I said right at the beginning, is the trend of TCA moving to the end client. And as these technologies become more accessible, we've found greater rigor applied to our customers, who tend to be the brokers, where the outcomes are being questioned in near real time by the end customers. So I think many clients or many brokers, many sell side, you're being strong-armed to this, not just because you're squeezed for time, you're squeezed on the desk, you're squeezed on profit, but ultimately when the customers are measuring performance from your trades, not using your produced TCA, but using independent TCA, they'll start specifically questioning outcomes. Why did this trade on a Tuesday trade differently from the same stock in similar market conditions the following day? And then the whole thing ties back into not only TCA outcomes and proving what you can do, but also looking at automation. And so this pulls through the full kind of gamut of functionality. You need pre-trade automation, you need data intelligence, and you need systems that can handle this end-to-end, that are really allowing these traders and the people on your desk to manage these exceptions. They become managers of the system and operators, as opposed to acting on every single market event. And this is really what we're moving towards, that level of automation.
Absolutely. I could definitely agree with that point. And I think we could clearly see from this conversation today the true outcome and efficiency that artificial intelligence, machine learning does apply within TCA, right, for your trading and execution outcomes, and how important it is to really challenge how the trade looking at their TCA today, right? As we said, I think I can't touch upon this point enough. We know that they're the expert and they know exactly why they're trading the way they're trading. But as a trader, you really need to challenge how that TCA is reflecting back into your execution. And ultimately, if you want to be the most efficient out there, you need a platform that's going to allow you to truly apply all that efficient information you're providing from a machine learning perspective into your automation, your smart order routing, right? Being able to apply all those preset rules, all those rules-based trading that you have within your platform based off of all the information that you've applied within your TCA or gained from your TCA. So Meaden, I couldn't agree more with your points there. I believe those are truly the most feasible aspects of where we're going with trading and how efficient and automated trading is becoming, right? These are the tools that are really going to enhance you and give you a competitive advantage in the market. With that being said, I know we're running close to time here. I would like to know if Mike, Meaden, if you have any final comments before we conclude our webinar.
Nothing from me. I just think it's like we've been talking about the whole time. It's just important to make sure that you consider, realistically consider the long-term benefits of moving into a platform and something like this, because there might be some shorter-term work and pain that you have to go through for something like this, but in the long term, it's going to help you improve anything from risk to time management to cost efficiencies. And there's so many benefits of this going across, and I'm excited to see future developments in this space as well.
Absolutely great. And I couldn't agree more. I definitely am excited, right? If anything, I'm very excited about this Refinitiv and QUOD partnership and being able to truly look and deep dive into these TCA functionalities within AI and ML, along with Meaden to our clients and our prospects. It's been very exciting to share and definitely be at the forefront of this conversation, right? Being able to truly provide clients with that capability and that functionality that's going to take them to the next level of trading, and really focusing and being efficient in what they do has been very, very helpful. 1 second here. So also with that, we'll definitely start concluding. I think, Meaden, do you have also another comment you mentioned?
No, I'm sorry, we're short on time, but there are some unanswered questions. So we will follow up by email directly on any of the points that haven't been answered, so we can address those. And obviously from this, we're very happy to have any follow-up conversations with any of our team, which I think you're going to cover.
Most definitely. So thank you, everybody, today for joining us and being a part. We were glad to have you here interacting with us via the poll questions and being able to share a bit about where really TCA is driving into trading and using both AI and ML. Again, as Meaden mentioned, we would love to continue the conversations regarding our Refinitiv and QUOD partnership with you. So if you have any interest, if you want to have further conversations regarding our TCA capabilities, please feel free to reach out to us, and we will gladly schedule some time to further discuss with you. If we didn't get to your Q&A questions today, don't worry, we'll definitely answer them after the webinar is over and continue our conversation from there. I'd like to thank everybody, and with that, we conclude our webinar. Thank you, everyone.
Thank you very much.